Today is Thursday, May 21st, and what we see from FinViz is that the attempted move up in the morning was met at 10:15 a.m. with a lot of pressure. And so the pop brought us down below yesterday's close, and we were never able to get above yesterday's close in the Dow. Same thing with the NASDAQ, but more severe, and the S&P 500. Lots of red, advancers and decliners. Decliners leading advancers, but you're going to see when we look at our oscillator, let's just bring in the oscillator here. This is the oscillator, and I've already drawn some lines on it. So we pulled back just a tiny bit today, but it's significant because we have high, low, 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 and a tick lower, just a tiny bit lower. But now we've got this line here that if we can't do something with it tomorrow, if we can't have a positive day tomorrow that takes the McClellan oscillator higher, meaning we have to have advancers leading decliners, obviously. And how much do we need? For it to be unchanged, we need advancers to lead decliners by 310. So we need more than 310 advancers over decliners to be able to move this line a little bit higher. And to get to zero, we need minus 1458, 1558. So, there's a possibility we get to zero. That's not out of the question. But it's also equally easy to get more than 310 and pop above that line. So tomorrow will tell us a lot about what we're going to see next week. Let's now look at some other indicators. Our volume stacked looks like this. A little bit higher than yesterday, but basically we've got 3 days of volume which are less than the week before, pretty much similar to the week before. So again, no commitment, no direction, no volume. Our advancing shares and declining shares were pretty much equal, and our summation index, which is the 3 to 6 month indicator, ticked up a little bit. So you can see that we have this down peak, up, and then a little bit down. So this is possible again. If you look at this down, this up, we can still have another down, and that's what you've got to be protecting against, because there's nothing out there right now that's saying that everything is clear. Let's just take a quick look at the banks, because we're there, and the banks were essentially flat, all around 1%. Some of them did a little bit better, but the banks are flat, so that's a good sign. The banks aren't being attacked. SPX, we said that it was going to go down and test the 200, and it almost did. So we still could come down tomorrow, test the 200, and then if we have any strength, we'll move up in the day. If we don't, then we're going down to the 50. Apple, still a great stock to own, still heading towards 323 and eventually 327. This is a 200% Fibonacci. This is a 100%. So we're just in this zone here where we're trying to break out. Almost did today. We created a little bit higher than the previous, but we pulled back. So Apple is still good. Caterpillar is playing around on this cloud, which is pretty dangerous, which means there's no support for to keep this stock moving, at least from a cloud basis. Our lowest today was not at the top of this cloud, but tomorrow we're looking for, let's just put a line right there, and we say tomorrow's low could easily be right there, which would be the top of this candle. So we're looking for a possibility tomorrow of a little bit of a pullback into here, but that puts us below the cloud for Caterpillar. So again, it's a stock that you're holding at this point for dividends and for future potential, but it's not something that you invest in. Home Depot had a good day today. Home Depot jumped off of this 88.7%. This is not a major Fibonacci, but it's also where the D was for the Gartley pattern, for this bat pattern. That the D was at 235.19, and that's where we got our bounce today, and we moved up. So I called that Home Depot is going up, and I think it is. That I rolled my 4 short 245 puts into next week to pick up another 89 cents to give me a little bit more time before I get socked with the stock. I do sort of want to get the stock assigned to me because I want to pick up the $1.50 premium before January the 3rd, the ex-dividend date, and because I just think that Home Depot is a good stock to own. Cisco, which we've been looking at, fell below the 200, not a good sign. Facebook finished its Gartley today, so that is significant. We've seen so many stocks finish their Gartley pattern, and this was a Gartley alternate bat because the B was at 38.2% of the XA, and then the C came down to 38.2% again of the AB. So you can see that's why they call it a harmonic pattern. And the next harmonic is going to be take us up to 1.13 of XA, and that's the one that we hit. So we're going to look for Facebook tomorrow to do a little bit of a pullback, and let's just put an arrow down there to show that that's what we called. Where do we go now? We go to NVIDIA, which pulled back into the gap, just a little bit of a needle pinprick into the skin here, into the gap. Let's see if it goes tomorrow and fills the gap. But remember, it's fulfilled its Gartley pattern. This 1.13 XA popped up. They had earnings after the bell tonight, and the earnings weren't so bad. So this is an extended chart. So we're showing after the bell, and it was dropped $9.30. So tomorrow, expect NVIDIA to go back and try to find support on the bottom of the gap, which would also be pretty much right where this D was for the XABCD. This, again, this is another alternate bat pattern. So watch that. If you want to buy more of NVIDIA, or if you want to get out of NVIDIA, get out of it when it loses the gap tomorrow. Get back into it when it catches support at 334 and tries to move back up through the gap. Whirlpool, still not too much, down 14 cents. FSLY continuing to rock and roll. Netflix down $10. It has completed its Gartley, and that's why it's channeling. That's why it's not doing very... No, it hasn't. I'm sorry. This is not a Gartley. This 1.13 of the A to B is... the 1.13 of A to B, yes, is the top end of a shark pattern, which still calls for Netflix to be going down tremendously. I just don't see it unless technically the shorts pile in. I still don't see it going all that way down, but the shorts could try to make some kind of money off of this, trying to take advantage of the technical opportunity. W, just not seeing anything there. So that's it for today. Where are we going now? We're looking at the SPX, which should go down still and test the 200, and that's going to be critical. If it doesn't hold the 200, we do have a flat cloud. We do have a cloud here that it could try to pass, try to touch. And let's remind ourselves about the McClellan oscillator. Let's pull this chart in here. The McClellan oscillator really wants to get higher than its point yesterday to show that the bulls are still in charge. If it doesn't, then the bears are definitely in charge. We have one lower high, two lower highs, three lower highs. This could count as 3.5, and then we'd have a fourth lower high, which would send us down next week. So keep an eye on all of that.